Yeah,
Yeah.
exactly. Yeah.
That makes sense.
Okay, here's another good one. What impacts a buyer's interest rate the most that people don't realize?
What? Say that again, Caden. Sorry.
What impacts a buyer's interest rate the most that people don't often realize?
Credit.
Yeah.
Yes, because if your credit is at there's certain levels of where your credit score is, that if you qualify with the bank, you qualify with the bank, and they're going to give you the same rate. But when you get to a certain threshold, let's say at the lower end of the threshold, banks aren't going to look at you. Now you're going into a different level of lending, being the B lenders. Now you're looking at a higher interest rate.
Yeah.
And then you can keep on going down to private. But I would say the biggest one that affects the interest rate, and the only one I can think about, is credit.
Now, when looking at that credit's the biggest impact there. Is it something within that whole credit history payments?
Yes.
If you miss payments, do they just look at the score, or is it such a big, is there one big piece of your credit that they look at more?
They'll look at the score first.
Yeah.
So if your score isn't within a certain range, it's below that, they're going to say, no, not even going to touch it without even looking. But if your score is within the range that they're going to look at, now they're starting to go through the, the details of what, made up that score.
Yeah.
Because lots of things can make up the score. You could have perfect payback, but your utilization of your credit is super high. It's going to knock that score down tremendously.
Yeah.
So they're looking at that, but the score number one first.
Okay. Yeah. Yeah. Fair enough.
Good.